All right, let's get into this because we have Nick Hill and Daniel Foch from their podcast, which is the Canadian real estate investing podcast. And this episode is kind of part two from the episode that we recorded over on their podcast. We're going to dive into, a number of topics around Canadian real estate. We're going to kind of continue the conversation we started over there. So if you're listening to this right now and you're like, wait a minute, part two, look in the show notes right now, like scroll down, open up your podcast platform, look at the link that's right there in the show notes. That's going to take you over to their podcast, which is where we recorded part one of this conversation. You can go, if you like, pause right now, go listen to that episode, then come on and join us here for part two. Otherwise, do it in reverse order. Let's experiment a little, but let's get into it, guys. We are welcoming you to our show, and we are excited to have you here. But we want to unpack a little bit about each of you. So I'll let you guys figure out who you want to start with. But give us a little story here. Who are we talking with, and how did you get into, say, podcasting? In where you are right now and what your roles are.
I'm going to start because Nick has like a really booming, deep radio voice, and I don't want to be embarrassed after that. It's a hard, tough act to follow. So my name's Daniel Foch. I'm a real estate broker by trade. I currently work as the chief real estate officer for a company called Valerie.ca, which is Canada's first AI real estate brokerage. We're an AI company that sells real estate, and we help realtors to refine their business. A big piece of that we hear about in the real estate space is the Millionaire Real Estate Agent book tells agents their first hire has to be an administrative assistant. And so we're really trying to make it our job that we consider ourselves a hire to agents who want to scale from that kind of low six figures to high six figures by bringing on an admin. Yeah. Beyond that, I talk too much on social media about Canada's economy, the real estate market especially, and dabble in politics. But it's been kind of, it's hard when there's an election going on. But that's kind of me. That's who I am. I do a lot of research work on Canadian economics and housing. One of the ways that I make income is through consulting a lot of developers and businesses in the space on how to wade through the housing economics right now.
Awesome. So happy to have you there, Dan. I see your content. It is so consistent and so informative. Like everything I see, I'm always like, how did you stumble across that chart? Or did you search for it? Or I would love to learn more, not today on this podcast about your routine, but I love knowing, and seeing all of the data that you dig up around, the real estate market is quite often the case, but also, you bring up the very informative data around politics and around the markets in general. So we appreciate you for that. So definitely give Dan a follow. Nick, we've had the opportunity to meet you in the flesh when you folks were down here for a real estate meetup. It was an awesome pleasure to get to, put the booming voice to the name and to build what looks like a pretty awesome connection here. So Nick, tell the group about yourself. How'd you get in and what are you up to these days?
Yeah. Thank you so much for having us on here, fellas. It's too bad. I really wish we could have gotten more into Dan's morning routine, which I know has he gets up at 3 a.m., rubs a banana on his face, puts his face in a bowl of water, and then looks at charts for 6 hours.
Does he do any vocal exercises to try to strengthen the booming voice?
Dan, you and I have to hang out because we got to compare.
Yeah, the banana part, right? Yeah. John, you connected on that?
At 3 a.m. on the, yeah, sure. Okay, cool.
All jokes aside, my name is Nick Hill. I'm the other half of the Canadian Real Estate Investor podcast, which Dan and I started almost 3 years ago. Actually, I guess we started it more than 3 years ago, but we didn't start releasing episodes until about 2 years and 10 months. It's just crazy to see how much this business venture that we've done has changed our lives for the better and allowed us into arenas like this to speak with people such as yourselves. So I'm a mortgage agent by trade. I help investors and end users across the country secure and source capital for any type of investment, whether it's your first condo, your first duplex, or your first 150 unit building. I'm also a real estate investor. Dan and I recently exited a small fund that we had built up. We do events and speaking engagements across the country, which is also a ton of fun, and really just have been trying to add value back to the real estate community as it's really gone through probably the last 5 years, probably one of the most volatile kangaroo markets, right? Not a bull market, not a bear market, but literally a market that's so all over the place. So, we've had no shortage of things to talk about, but we've always led with just trying to add as much value to the industry as possible. So happy to be here and try to add value to you and your listeners.
Yeah, and we want to thank you for that. And both of you. We've been active listeners to your podcast. We talked about that on the previous episode, but adding, one of the things that we're trying to do is add value as well. But I think your, when we listen to yours, we always take away huge value. And again, thank you for adding to the community, which kind of like leads me into like one of the questions I think we all wonder about when we hear, voices that we find familiar is how did Nick and Dan stumble across, the pod, like how like being obviously it makes sense that if you're a mortgage broker and a realtor, how you may have met, but maybe you can fill us in, but how do you
meet cute? You want our meet cute story, don't you?
Right. Yeah. But then how does that transition into like, is it like, hey guys, let's just flip on the mic and start talking about some of the things that we're passionate about. And then it spirals from there. And that's kind of what we did in this, for this particular podcast. And we did that with Matt Bigley, one of the original co-hosts, but talk to us. Like, what does this look like as a story to get you to one of the most listened Canadian real estate podcasts or Canadian podcasts or business podcasts, in Canada right now?
Dan, if you don't mind, I'll start things off because actually I did make the first move. So it's only
there you
fair
go.
that I
Taking
get
credit.
to-
He's taking credit.
It's only fair I get to speak
he was the
first
brave
here.
one.
Yeah. So Dan and I were a couple years apart, but we'd gone to the same university. We had a bunch of similar friends and whatnot. And when I started actively putting myself out on social media as, hey, look, I'm a full-blown real estate investor. Now this is what I'm doing with my life. People knew me as an entrepreneur. I'd had several businesses. This was kind of just in probably a lot of people's perspective, the next thing. But I had a bunch of mutual friends let me know about Dan. And when I went and followed him on Instagram, literally that day, his story was about a possible real estate deal that was a few blocks away from where my parents lived, of all places. So I was like, what are the chances of that? So I reached out to him. I think we literally met for wings and beer the next day, and kind of agreed to just start working together. We didn't know what it was going to look like or what we wanted to do. We knew that we wanted to have a major impact on the industry and add value and kind of recreate some of the stuff that I think we had witnessed fall off over the years. So we started a podcast called the Brick and Mortar Podcast. Actually, Dan had kind of been doing it and allowed me to hop on, and we brought in people and interviewed them and, kind of had no direction. And just as we were about to, like literally just as we had agreed to quit that podcast because it wasn't really giving us anything in return, Dan got a very fateful DM from now we endearingly call them our pod fathers, but the guys who have the Canadian Investor Podcast, another amazing podcast. If you're listening to this podcast, I can tell you will like that one. Anyways, they were looking for a show about real estate investing because Canadians like real estate investing, and these guys focus on kind of stocks and the capital markets and whatnot. And they were like, yeah, do you have any experience in podcasting? Dan's like, yeah. And they're like, do you have a host? He's like, yep. And literally we got in a call with those guys the next day, and that was 3 years ago. And it has been 2 episodes per week without fail, recorded all over the world when we need to, sick or angry or tired or whatever. And yeah, you guys know the game, and it has been it's been an amazing journey and a life-changing experience, I think, for both of us, and for hopefully from what I hear for a lot of the people that listen to us as well.
That is quite fantastic. I want to hear now from Dan, how much of that was real, and then tell us the real story. No, I'm just kidding.
No, well, I will mention, like, I think that it's such a good reflection of what we preach to a lot of people in our audience, which is you should be like connecting with people for purposes of doing business together, and really strong friendships and long-term business relationships can come from that. Real estate's really interesting that regard, because like your business relationship can be very short term, right? Like Nick originally reached out to me about a deal. I had a deal around the corner from him. He was interested in it. I walked him through the property. We were talking about potentially fundraising, bringing in some investors to do it. Took it all the way to the end. Thing got hit by a tornado. 5 years later,
literally got hit by a tornado and got destroyed.
You left that part out, Nick.
Yeah. So, but 5 years later, 5 years later, Nick and I are best friends. We run a podcast together. We do all of our businesses are together, and so this is how these relationships happen. And he was very much like, because of that, as a result of that, was very much in the right place at the right time when I got that message from Braden on the podcast asking if we were looking for a Canadian host. And then he was like, yeah, we also have to interview a co-host. And I was like, no, I have that guy. Like, let's just do this. Let's just start it tomorrow. Right. And we did. So.
I love it. I love it. That is, we chatted on the part 1 on your show about, the power of partnerships and all of these things. And I think, something that I'm seeing emerge in your story, which is similar to the story between, John, myself, and Matt, is that while it's great to have partnerships, sometimes it's like they just have to happen. But in reality, though, it's like that's where the networking, connecting, keeping kind of like your ear to the ground. And really, it's almost like when you bump into that scenario or that person, you almost know in your gut, like it's worth giving it a go. And it sounds to me like in the meantime, you guys were working at it. So on the first podcast, you had mentioned maybe not full direction. The part that I want to give you credit for is that you did it. Right. And by doing it, it allowed you to get to the next place in the journey. So maybe you don't do it forever with no direction, but because you did it, instead of waiting until the perfect time, until you knew exactly with absolute clarity, exactly what it's going to look like, you put yourselves out there, you did the work. And because you did the work, those opportunities, showed up, right? It's like the definition of luck. I've heard, this quote, probably butcher it, but the idea that, it's about like basically opportunity and is it determination? Is it something along those
You're
ideas?
doing wonders here.
Yeah. I'm just making things up now, but it's all about the
opportunity,
idea,
right? Yeah.
There it is right there. So, ultimately at the end of the day, like I see that coming through, and I also see, kind of like a similar scenario for, how John and I, connected and how Matt and I connected in the real estate world. So I'm loving that. I'm hoping that folks that are listening to this, maybe you're in this stage where you're either about to start something and maybe you haven't yet because you're not exactly sure what it should be. It's like, I think getting started is probably going to be key. And then the second piece is, maybe you're after, like you want that partnership, but you just haven't found it yet. Like it could just be right around the corner. So it's a big one. I'd love to hear, like, based on what you guys have learned all along the way, what would be like, your secret sauce moves that you're now kind of putting into play based on everything that you've done to date in order to continue moving forward, be it for investment or for business?
I think the big one is lead with value. Like that's just a principle that we have in our business, Nick and I. It's like we give people stuff, right? And when we decided, we had a lot of our listeners reach out and ask if we were going to start a coaching or education platform, and we had no intention to do it, but eventually they basically pushed us to do it because they wanted more. And we had given so much information away for free over time that people, like, there were people who were begging us to give us money, right? And so if you lead with value and you don't think about what's in it for you, you just give to others first and foremost, you never have to worry about what comes back to you.
The universe takes care of the rest, eh?
Yeah. I completely agree. I think the only other thing would be just to surround yourself and I think that when you do put out that value, the good people come to you, right? That it's an inflow, not an outflow. You don't have to go looking for them. And I think what Dan and I have been somewhat successful at anyways is creating those networks, both, IRL and URL. So in real life and online. And I can comfortably say that without the help and guidance and friendship and mentorship from, literally dozens of amazing people in my life, I would be nowhere close to the moderate success that I've experienced at this point. And that's really one of the things that we've tried to, it's not just lead with value, but it's lead with value and build a community around that value. And I think that community to get more into, that community is where you're going to find the who's on your power team, right? Another principle that we like to operate by is that who, not how principle. So instead of how do I do this, who can do this for me? Who can do this with me? And we've just been good at, if you put out enough value, good people start to kind of come into your life. And, present company not excluded, right? We're on this podcast because you guys came out to one of our free events that we host nationally. So, I think the people play a huge role, and real estate really is, we call it a contact sport sometimes, but it's a team sport, whether you want it to be or not, whether you're in a direct partnership with someone or not, you're relying on other people, and you meet those people at when you put yourself out there, right? So Kyle, back to what you were saying, just start, right? Like literally just start. If you're thinking about, I want to start a podcast, but I don't know what I'm talking about. Okay, well, just sit down by a mic and start talking to yourself online. You might be crazy.
Perfection is the enemy of progress. Is I think that one, right?
For sure.
Yeah, exactly. So, I just think that there's so many people that want to do so many things. And again, just to tie this back to real estate, this is one of the main reasons that people don't get started in real estate is analysis paralysis, where, I hate to throw this guy under the bus, but I was out in Saskatoon. I don't know if he listens or not, but I was out in Saskatoon a few months ago with Dan we fly across the country and attend the meetups that we host with our amazing cohorts across the country. And this guy's like, "Oh man, I'm happy you guys are out here. Just sort of, figured out, listen to you guys, and I've been trying to buy a property." I'm like, "Oh, nice. How long have you been trying for?" And he basically told me that he's been trying to buy a real estate property for 20 years. In Saskatchewan. I'm like, if you had bought 20 years ago and even made the worst mistake of your life, where do you think you'd be now? So that's another thing that we try to teach and instill people, and that we talk a lot about is that disqualification process as well, right? So lead with value, teach people how to disqualify and get rid of things that are not going to, the shiny objects and the time wasters, and then surround yourself with good people.
I think we have a lot of similarities in the values, just in that last statement that you were making, like we have a phrase that we continually bounce between both Kyle and I, is that B+ work that gets done is better than A+ work that never gets finished.
Yeah.
And sometimes we have to tell ourselves that you're right now working on A+ work and we're never going to get there because we're waiting for A+ work, whereas B+ is going to get out the door, and like that deal will get done if we, are going for B+ instead of A+.
Or you'll never get to that A+ unless you've put in enough B+ work. That's right. Like you're never going to have those amazing videos or amazing, like we've both had other podcasts before this. That's you guys have thrown other events before this. You've started other businesses so that when you start your 8th business, right, which sounds ridiculous to someone who's never started a business, but if you started a business and gone to owner and incorporated something, know that by the 8th one, like I know how to do that. Like that process now is 10 minutes for me. Whereas if I'm just starting my first t-shirt company or my dog walking business, that process is overwhelming in cases, right? So it's all just about, again, compounding that work.
Well, and when you think like, and I'm going to take the cake here, John, that usually it's me stuck in the A+ mentality, and John reminds me, hey, like, let's get this out the door, because what you see over time too, and I think you alluded to it there, Nick, is like, as you put the reps in, and complete reps, not partial reps that never see the light of day, it's like, as you do that, your B+ work becomes better than a lot of people's A+ work. Right. And it's like, if you do those reps, it's like ultimately at the end of the day, what you're doing is you're making like not even your best work, like some pretty solid work. And it's a mindset shift. And I know it's easier said than done, but I appreciate how you framed it.
Yeah. And if you go back to the leading with value, like I think that segues perfectly into where we left off from our first episode, which is, on your feed for your podcast, which when you think about leading with value, I think that's something that's always guided us when we go into deals. Is like, how can we make this a win-win not a win, I win, you lose scenario. Like, how can we give value to this seller or buyer in this scenario so that we both come out, and if we can lead with value there, then it's going to be great for everyone. And if we feel great for everyone, then it's going to be a good deal for us. So that, in a way, that's kind of a great transition, because when we left off, we talked about vendor take back, seller financing for properties, and thinking about those tax deferrals that happen. But if we kind of think about VTBs and the sell from basically the seller perspective and move into, say, the buyer perspective, I want to get your take on this, gentlemen. What are some of the tips? What do you see as some of the important moves when considering trying to move towards buying a property, and using seller financing as one of the options?
To me, I think a big piece is aligning yourself with the right team. So you need to be able to present a pretty complex issue to, in a lot of cases, not exceptionally sophisticated vendors, right? So, if you think about the fact that the VTB kind of gets maximized at 800, or I guess $1 million purchase price, right? 800K capital gains reserve. You're not selling, you're not buying and selling properties from, institutional grade owners and investors. You're buying it from kind of mom and pop investors. In institutional, like most of my clients, where I really learned to maximize the VTB was working with a lot of developers and investors, because they still like it for other reasons. But all of that being said, I think you need a good accountant or some sort of spreadsheet that can communicate the potential tax savings to the vendor, some sort of calculator. I imagine you guys probably have something like that. If not, we'll have to collaborate on something, because it's a big campaign we have running for sellers right now. But the other piece is you need a realtor who's done these types of deals and or has access to them, and understands how to structure them properly. And you either want like a mortgage professional or a lawyer involved in it as well. I guess you're kind of asking me the first step, but to kind of structure the term sheet, I think those would all be the first steps, because you want to know what you're really pitching something to a seller, in a lot of cases. And so you want to make sure you have your pitch deck, your proposal to them proper. And we have it written in a 1-page Schedule A that we put in all of our real estate transactions that basically says, here's what we're proposing. Here's the potential tax savings. And we kind of almost really explain it to them in a way that makes it compelling as the total proceeds of sale, rather than, and I think that really, really the first step you need to do is actually educate yourself, because this isn't just, it isn't just going to find the right property. After that, then you go and find the right property with a realtor who knows where to find these types of properties.
Yeah, I'm loving what you're kind of articulating too, how important not only for you to understand the process, but it's to be able to clearly articulate the process to the individual, right? So especially if it is approaching a seller, they need to understand all the nuances. And it also means, all great real estate agents do this, is understanding what the seller's after, what they actually are trying to accomplish by selling this property, right? We don't always just sell, a property because we want to move. That's fine with a primary residence in some cases. But in their case, if they're downsizing and they want, money for retirement, it's how do we frame this to show that the benefits or the upside to them potentially considering this, not only getting the price they're after, but then being able to help them accomplish the goal that they're after as well. It's you can almost hit multiple, checks off of their list. Nick, what else would you say is sort of involved in this process? Maybe more from the lending side, given that that's sort of your world, and now the seller is going to potentially become a lender for themselves.
Yeah, I think, again, it really all starts with the duality education, right? You've got to be able to go in there and pitch it to as simply as possible, with as many net benefits, while also being clear that, I know it sounds too good to be true, and I'm the bank, I don't get it, kind of thing. It also depends on what types of properties we're looking at, right? I mean, you guys mentioned the single family home or the primary residence. Well, sometimes in some cases, VTBs are really one of the only levers that you can pull for some types of deals, right? If we're talking distressed properties, if we're talking rural properties that, lenders won't really look at, if we're talking properties that are, beyond repair and unlivable, or have they're totally vacant or something like that, the VTB offers a strategy in to a lot of those more unique or harder to traditionally acquire type properties, versus just trying to go to a lender or even a credit union, or even on the private side of things, right? So I think being able to convey that, whether you're, and this is really where you're, the sales aspect and the relationship and the humanity comes back into play, is you got to understand who you're talking to, right? Is it the old Nona or babushka that you're like, let me buy your primary residence, get out of here? Or is it the investor that randomly owns, a triplex that has like 100 acres on it, that there's also like boat storage and stuff like that? And you're like, how the hell do I buy this? What do we do with this thing? So I think it really, it all starts with who you're speaking to. And then I think it's, you can blanket a lot of it, but there's going to be subjective things about each one of those deals. So, but I defer to Dan for a lot of the VTB stuff, because he's done a lot more than I have.
Yeah, no, good advice for sure. Like, a good advice for more than just say VTB, and it's any sort of deal or any sort of negotiation, but also just any sort of, when you're working with people, put yourself in their shoes. Just say, like, what is some of the pebbles that are rattling around in their shoes right now? How can I put myself in their position to be able to kind of come up with a solution or strategy that makes sense for them? Because I'm trying to come up with that lead with value, that win-win scenario. Dan, you mentioned a campaign around, VTP in particular. Talk to us about that.
Yeah, I mean, I think one of the big things right now is, what Kyle mentioned earlier, like, you get a lot of vendors who haven't really price discovered yet, and they still want to sell, and they apparently don't want to price discover. And one of the easy ways to get them liquidity is to remove the biggest friction in the transaction process right now, which is the lender, right? So you've got so much equity in Canada, tons, right? The average loan to value is like 35%. So you've got a lot of sellers with a lot of equity in their properties that don't necessarily want to continue owning those properties. And I'm convinced that, like, a lot of real estate investors, if you were to offer them $100,000, they would say no, because they wouldn't want to pay the tax on it. And I think, you pretty much have the most tax sensitive consumer or counterparty. So what we're trying to do is really drum up vendors who want to sell in today's market. The hook on the ads that we're running is, do you hate capital gains? Right. And me too. Here's and yeah, we're kind of working on the lead magnet right now, which is going to be sort of a series of calculators and things like that to help. We would love to collaborate with you guys on it, but a series of calculators to help vendors kind of achieve that liquidity. If you look back at the 1990s, which was the last time we really saw a major housing decline comparable to what we're seeing in Canada today, VTBs were like the only thing keeping the market moving for a period of like 3 to 5 years. And the reason for that was because, well, banks and trust companies were going bankrupt left, right, and center. And so that was a risk on its own. But the other piece was that you see something called the credit contraction in a high risk environment, right? Rates might be going down, but it still doesn't mean that banks are going to be lending you money because the risk is too high and they're underwriting. We just saw a Canadian lender change their policy to what they consider high risk professions, as an example. So their underwriting tightens and they start getting more aggressive with who they're excluding as borrowers. And now all of a sudden, banks are the biggest obstruction in real estate transactions getting done. And so that's really the big thing that we're trying to do is create liquidity in a market that's highly illiquid. I mean, you're seeing inventory piling up day after day in the real estate market.
Yeah, I love it.
The last thing I'll add there is I think that we say this often. The real estate really kind of comes down to two sides. There's the numbers side, and then there's the human side of things, right? And in a great deal, they both make sense. And I think a VTB is a prime example of having to have both of those things work out, right? Because in some cases, you can just find a great deal from the numbers side of things. That's fantastic. But what if that great deal has a bad tenant that doesn't pay rent, right? Or what if that deal only works if it's done with a VTB? So using the VTB is a really great way to kind of go back to that duality principle of real estate, where there's the human side, the relationship side, and then there's also the kind of the hard factual numbers side of things.
Well, and what I love about it, and the fact that it's happening over here, and you guys have a great campaign going on. So, I'm sure there's a lot of people listening here, both in our audience and your audience, that are going, okay, like, so what you're saying, like, so you're telling me there's a chance that I could still buy a profitable real estate investment in this environment, which I think a lot of people have, people are getting to this place where it's almost like, they're like, oh, I guess that time is gone, and in reality, I think what you guys are saying,
think that let most people think that.
Yeah, exactly.
Yeah.
That's exactly it. And, and for us as well, as you guys know, and I know we haven't spoken about it too much on our show, but a lot of our seller finance deals we've been looking at is in the US lately. Now, it doesn't mean that, we don't believe in Canada or anything like that, but the vast majority of our real estate portfolio is in Canada. It's actually local to us. So, for us to go, well, if we are going to diversify out, we look down to the US a little bit, not to mention it's already hard for a foreign national to get a mortgage in the US, right? They basically, you have to collateralize the home and your firstborn, which is like, sometimes that's a little risky for some people, depending on how you feel about your firstborn. But, ultimately at the end of the day, it really gives a lot of flexibility, and it allows you to structure things in a way so that you can also protect yourself, which I'm sure you guys, recognize is this fact that there's a lot of investors that bought property as we were approaching the peak, and then all of a sudden rates went through the roof and all these things happened. And now, some people are, really, really struggling with, negative cash flow and so forth. Like if you get to design it with the seller or the vendor, then you can put yourself in a position that, at least, what those risks are going to be. And, unlikely that you're going to put, say, a seller financing deal that's variable, for example, right? You're probably going to pick a fixed rate that works for both you and them, and maybe a longer balloon if you're lucky enough to do it. So I love it. How do you feel that, are you on to something with your campaign so far? Like, are you finding that people are becoming more open now that the market's hitting this point where, deals are sitting there? I believe right now in Toronto, some of the lowest house sales this past month, I believe I saw, and it was probably on Dan's feed. How is that campaign going to get some of these properties moving?
Well, the challenge is that when you have a volatile market, it creates unrealistic expectations. So it's creating a lot of interest, right? But the challenge is that it's people who are interested because they think that a VTB is going to get them their 2021 peak selling price, and it's not, right? There's some give and take. I mean, you can probably get a little bit more price, to be honest, if you're giving somebody a VTB, and it saves them from having to go through that process, and it reduces the appraisal risk of the deal because you're the seller who's saying that you believe in the value. But for the most part, I mean, the thing is, we've always gone after complicated deals. Like, it's just something I've always done. And this is a market where almost all deals are complicated. But so I would rather have these transactions than anything else, but in the grand scheme of things, I mean, this or like Power of Sales is another campaign that we run as an example. Anybody looking for distressed properties thinks they're getting a deal on it. They're kind of shocked when you say to them, hey, no, you're actually negotiating with a very sophisticated lender who really doesn't care about the outcome and has a legal obligation to protect the seller's equity. And probably a team of lawyers behind that is advising them what to do or say so that they don't get in trouble with said seller's equity. So it's a big education process, and I guess I kind of hate myself to sign myself up for that on a repeated basis. But this is where creating content and stuff like that comes in. I only have to explain something once, and I record it, and then we ship the recordings to people.
what is your, like, if we think, Kyle mentioned, the U.S. and investing in the U.S. is a venture that we've, in the last couple of years, kind of moved into to look at sort of our options. We found some success there. I'm curious about your thoughts on investing in the U.S., financing in the U.S. What are some of your opinions about investing in the U.S.? I'm sure our listeners would love a take on investing in the U.S. from you too.
Yeah. So I personally, so there's a couple of things I'll say. Number one is market, comparing the Canadian to the U.S. market until basically this trade war started. I would say Canada's market looked like it had better potential than the U.S. simply because the U.S. is still pretty overbought, right? Prices are high, rates are high. You couldn't get the yields that you could get. You get the same yields in a comparable market in Canada that had better long-term growth potential, better local employment, lower crime rates, etc. The trade war and economic volatility has shaken that up a little bit in two ways. Number one, it's introduced probably a lot more risk into Canada's market in the long term, in the near term and in the long term, which kind of makes me revise my projections for Canada down a little bit. And it's also introduced a potential recession to the cards for the U.S. market, which creates a potential better buying window for the U.S. Like Canada's prices are already down 20% off the peak. U.S. they came down like 3, 5, 7% depending on the market, and then they jumped back up. And there are certain geographies like Texas is blowing off. Texas is like pretty overbuilt. Florida is blowing off due to being overbuilt. People migrating back to. You're kind of seeing the reverse exodus. Like the fastest growing markets right now are actually all the ones that sank during COVID. So New York, California, et cetera. So that creates opportunity for some of those ones like the Texas and Florida of the world. Florida also has that huge condo thing going on. I'm not sure if you guys are familiar with the assessments, the special assessments, where basically tons of condos are basically bankrupt. But anyway, all of that to say, I think I'm pretty balanced. I actually think I like both markets equally. I think they each have their push and pull factors. I'm very keen to be buying in the U.S. sometime soon. The one thing I will say about the U.S. is it's such a highly competitive market that every time I go and try and become a direct investor in the U.S. and buy a property and say, oh, I can burr this and I can renovate and rent it out, and I look at my IRR, and then I go look at what I can make giving my money to a GP in the U.S. who is far better, far more experienced, has way better deals, has been doing it for 10 years, no risk and zero work for me. I can never, ever, ever, ever beat a good U.S. GP. And so I've never direct invested in the U.S. I've always been a limited partner in the U.S.
Love it. Love it. There's so much that you've unpacked there that I think is really important for people to sort of take on. So you had mentioned some of the things too, like where, a piece that jumped out at me was the idea that at least until the trade war that, Canada had some, it looked maybe to have some better potential, or places in Canada, not everywhere, of course. But at the same time, that didn't remove you from potentially wanting to invest in the US. And I think that's a big takeaway, because we talked earlier, I don't know if it was on this episode or in part one, about, the whole analysis paralysis thing, right? Where people then sort of, get on the data train, and sometimes they need to find the perfect market. And then within the perfect market, they need to find the perfect property. And then they turn into the example that Nick was sharing, 20 years later, and you're still working on that first property, right? So it's like utilizing the data to have a good perspective, but not allowing it to sort of hold you back, I think, is a really important piece. And, Nick, any thoughts? Like, what are your thoughts in terms of the Canadian real estate market, the US real estate market? Like, where have you been sort of maybe eyeing up that next opportunity for yourself?
Yeah. So what I'll add to this, because I don't have much to add. I think Dan really made some kind of great kind of sweeping statements there. I think it comes down to a few things, and I'm going to get like more human psychology here for a second. The grass is always greener, right? Canadians want to invest in the U.S. Americans want to invest outside of somewhere. You know, I want to buy a place in Spain. The guy that lives there is like, I'd love a winter cabin in like, you know,
Every
Muskoka.
time you go somewhere new, right? It's like
exactly. So, and I think that as investors and entrepreneurs, which is probably a lot of the base of your show, or at least people that are curious about those things, is that we really need to be careful chasing that next thing, right? That, like, for me, you know, Dan and I get, and I'm sure you as well, you guys get presented with 1,000,001 opportunities a week, a day at some points, kind of thing. You know, if Dan and I wanted to go buy in Buffalo, New York, or Detroit, or Texas, or whatever, we could have taken one of the multiple opportunities that's come at us. But I try to remain super focused, and I try to remain really in line with my investment thesis. And I think that's where a lot of investors and business owners and anyone with just that enough of a risk tolerance to take an opportunity and try something, that's where a lot of people can get burned, right? So, I mean, if your investment thesis includes diversifying into the States in a certain asset class, then by all means, that's exactly what you should be doing. If your investment thesis is buying duplexes in Windsor, or flipping apartment buildings in Edmonton, or operating, Airbnbs on the East Coast, then maybe don't think about getting into the States right now, because that is an entirely new venture. It's really easy for us to say, yeah, you know, I'll just go buy something in St. Louis for, you know, $100,000 and, you know, 1031 exchange it into all this stuff that we've all heard before. But what you're realizing is you're really starting from scratch, right? You're building an entirely new power team. You're figuring out entirely new laws and tenant requirements, and just a whole new system. Whereas, again, if you go back to what Dan was saying, am I going to, like, is a guy from America going to be a better investor than me up here in my backyard? Well, I sure hope not. And if they are, then I'm not doing a good enough job as an investor here. So I want to focus at what I'm really good at, and then take whatever capital I have that I've allocated for diversification, even if it's in real estate, great, and go put that there, right? I mean, listen, I'm looking at possibly purchasing something in Mexico. You think I'm going to go try to do that kind of stuff myself? No, I'm literally going to I'm just going to give someone money, right? And there I'm diversified, but I don't have to go through that whole piece. So if you do plan on investing in the States or anywhere else, try to do it in the easiest way possible. That'll likely cost you a bit more money, but it'll save you in many, many other ways.
You know, I love that advice, because it reminds me of two things, and I want to make sure I remember the two, like, share the two things in the right order. But, you know, it reminds me of that quote. And we just did a podcast episode on this around goals and strategies moving forward for long-term sustainability and results, because it reminded me of James Clear from Atomic Habits. You know, like, you don't rise to meet your goals. You fall to the level of your systems. And what I heard you just say, Nick, is that don't just jump on a bandwagon because it's like the right move, or don't just go there because you heard someone say it, or maybe all of a sudden you heard it here on this podcast right now today, that you should go and look at this. It should be part of your strategy that you've already mapped out. And that brings me to the second component. Like, I've heard Alex Hormozy say this over and over and over again, which is like his mantra about the three kind of levels of, like, decision making, of like what you should do when you should do it. He's like more, better, new, which means the order you should decide on whether you should do more of that. And he's like, basically 9 times out of 10, whatever your current move is, like investing move or say business move, is do more. Just do more of what you're already doing, because you already have those expertise. You already have, say, the knowledge base right there. Just do more of that and you will win. Only move to, like, and then if you can't do more, do it better. And if you can't do it better anymore, then try something new. Don't do something new right off the bat. Right. Like, and I think that's what it just stuck out to me as soon as you said that. I was like, I'm glad you said that advice, because it's like more, better, new, and then make sure you stick to the goals that you're trying to set for yourself, and don't introduce a new goal just because you feel like you're missing out on the bandwagon, which makes me like wonder for you, Nick, or for you, Dan, is like, what are some of those, like, you know, those systems that you heavily rely on as, like, so important in the work that you're doing?
Yeah, it's a really good question. I'm not so much the systems guy, honestly, as I think that there's like it's really a who not how principle for me. Like, I'm good at designing this stuff and ideating and coming up with it, but I'm very, very much not an executor. Like let me give you an example. My CRM, whenever I work with a real estate team, or I mean, right now we're trying to grow a real estate brokerage, so recruiting a lot of agents. Like a lot of people use CRMs, and it's very convenient for me that in the fullness of time, AI is slated to kind of overtake UI, so which means user interface. So AI is basically going to erase the idea of like you'll need a CRM to go and tap into and type in your notes and whatever. Because the AI will do that for you, right? And you'll have a conversation with it and say, "Oh, I followed up with so and so." So my CRM has and always will be a Google Sheet, right, as an example. And so each week, so then this is where I aim for simplicity. But like a system that we would have is I'll literally go through a Google Sheet with my team and say, and we will do it once a week, and we'll all read through it. We'll sit together in a meeting and say, "What happened with this person? Oh, I called them. Okay, we put that note in. What happened with this person, etc." So that you know that. So I'm almost like, let's call it the person who kind of like ideates the system and then makes sure the system actually works. That's one thing that I would say, and really boiling them down from a simplicities perspective. In regards to the rest of the business, like we have a CPA who runs our events business, and he's very systems oriented. Nick and I, if Nick and I tried to put together an event, it would be very bad. I don't even want to try and think about what it would look like. So we have a brilliant person who can put that together. We have the course business. So we run a course business on school. We have it's like $100 a month, group coaching, two calls a week. That's the system. We, two accountability points, like just super, super duper simple stuff. And I think that when a lot of people hear systems, they think really complicated, like sophisticated things. But for us, it's like, why reinvent the wheel? Like, to return to the beginning of it, perfection is the enemy of progress, or perfection, I don't know, whatever it was. Nick and I are like, we're not rocket surgeons, right? You guys do math, right? We're not like that. We're like, we're sales guys. So it's like, what's the simplest thing for us? And so above all, our system is just simplicity, I think, to tell you the truth.
I love it. Nick, are you in line with that as well, or any sort of like systems that you've got in place that you feel are game changers?
Yeah, 100% in line with that. Like I am actively trying to increase productivity, increase output while actively doing less, right, and having more control over my time. And that's the one way we can do that. The only thing I'll add to that is just my mortgage business, where we've got like a nice, easy system. I know my touch points and my responsibilities with my mortgage clients, and my underwriters and my back end team does as well. And, it just creates a very seamless process. There's kind of Dan and I have a thing, right? Like the podcast, for instance, is non-negotiable work. So, outside of any kind of non-negotiable work, if you're not relying on systems and the system doesn't have to be, a system can include people as well, right? And I always kind of come back to people, and I think it's just about having the good people around you, and then having each person's responsibility allocated to certain tasks or things that that are on that obviously growing and never completed to-do list kind of thing.
Yeah, I love it. Gentlemen, as we kind of start wrapping here, I know that you have a wealth of information to share on the real estate market, more on ideas on real estate, specifics on real estate, but also like the current state of the real estate market on a say every twice a week basis on your podcast. Before we kind of wrap here, what would each of you say is like a big takeaway you want the listener to have from today's chat?
Yeah, I think, and this is something I say usually whenever I'm asked this question. One, it really depends on who you are and what you're trying to accomplish and where you are in your life at this point. I'm going to go back and keep it as basic as possible. If you are interested in becoming an entrepreneur, a business owner, a real estate investor, or a business owner or an entrepreneur within real estate investing, which can mean multiple different things, surround yourself with people that are doing it. It can be a lonely world as an investor out there. It can be tough. People don't understand that the trials and tribulations, the variable income, not variable mortgage rates, variable income. Whereas, 1 month you make $2,000, the next month you make 20 grand, next month you make 200 grand, 2 months later you're back to 2. So Most people don't understand the risk and the lifestyle that's associated with taking the leap into this. So the people in your corner, which are going to be the people that you meet at events, which are going to be the DMs that respond to you when you take that chance, which is going to be the email they send to this podcast to ask John and Kyle a question. Do those things, right? I think the most important is to just start and to surround yourself with people like-minded that want to see you win.
I love it.
That's my piece.
I love it. But, I got to say it's so unfair because like Dan got to like start writing out what he was going to say while you were talking, No, I'm just kidding. Dan, what would be a big takeaway you're hoping that the Canadian Wealth Secret seekers are going to walk away with after today's conversation?
I think that a couple of the themes that we discussed, number one is just do it, right? Like don't aim for perfection right off of the bat. I think that that perfect result is something that's cultivated through the process of doing. And so start doing and you'll eventually get there. And that perfection is, it can stand in the way of progress. The other thing is just to lead with value. Like very simply, if a principle in, and everybody, any economist or like anyone who's looked at this, as famous as like Marx, if you want to go full commie, or to any of the Austrian economists, that there's a surplus value associated with things, right? So if you can deliver somebody more value, if they get more value out of something than they feel, then they're paying you for it, then they're going to keep coming back as a customer. They're going to tell their friends, and and that's how businesses grow. If you're not giving any surplus plus value, then there's nothing for you to grow based on. And so as long as you're leading with value, podcast is the easy way to do it. You give it to people for free and they get to consume it, right? And then they come back to you and say, hey, how can, or they send it to their friend. But yeah, those are really the two key ones from my perspective.
Yeah, I'll just finish off with one more kind of, I guess, practical piece. So, we're in a very volatile and changing economic and real estate landscape right now in Canada. I don't want to hear anybody say, I can't find a deal, I can't get a deal done right now. We are seeing people getting deals done every single day across the country, in every market. There are deals to be done. You just need the right people. You need the right strategies. You need the right outlook. You need the knowledge to be able to go and find them. Good deals in marketplaces usually aren't found, but they are made. So on a very practical note, there's financing programs like CMHC, MLI Select. There's a secondary suite loan program. We've seen a massive push for missing middle housing and laneway suites and permitting and zoning changes. So I'm very excited for the real estate market here in Canada over the next 3, 5, 10 years. I think we'll go through hopefully massive rebuild and a renaissance period. So I want everyone to, there's a little bit of optimism, positivity to finish things off, because there is a ton of opportunity. You just not got to know how to find it and where to look.
Right. And you guys, I heard you say that you have your class on school and you offer coaching. Any place that you want people to go other than going and listening to your podcast through their podcast platform, but where else should they go right now if they want to get in touch with you?
I appreciate the opportunity to peddle our product here. We spent a lot of money on a domain. Actually, it's realist.ca. So realist.ca, and it's hopefully a realistic approach to making money in real estate. And we've built a pretty good group. There's a free community. There's free meetups like the one that you and you guys met Nick at. If people want to go and attend a free meetup, we have in 26 cities across Canada, almost 9,000. I think over 9,000 members.
Over 9,000 members. Yeah,
we have 1,000 members in our free online community, and we have about 100 members in our paid online community. That's $100 a month, and there's 2 group coaching calls per week in that community.
I love it. Guys, as 2 gentlemen who have been to the live meetups, definitely, folks, keep your eyes and ears open for those. Of course, they'll hear about them over on your podcast, Canadian Real Estate Investor, and of course on your website. So check out realist.ca. These guys are all over social media, so go check them out there as well. We'll drop some links in the show notes page for social media. I've had a true pleasure, and it's been an honor to connect with you both, to be on your show for part 1, to have you guys on our show for part 2. And I'm hopeful that this won't be the last time that we connect on the platforms.
Definitely won't be the last.
Yeah, really appreciate you guys taking the time, and honored to be guests on the show. We'll talk to you soon.
All right, guys. Take care.